Good morning, welcome. It is Friday, 6 a.m., half an hour before the market is going to open. And yesterday, we were anticipating, waiting for, the whole market really was waiting for Apple earnings. They did really well. They announced a stock buyback, and so their stock was up really, really high after market hours. I believe it was above even the MA 200. So we'll take a look at that. That is definitely going to pull the market up. And we had employment data that came out about half an hour ago. So we'll take a look at that as well. Both of those are potentially market moving events. Um, at the very least, Apple was pulling everything up. So we'll see how high futures are this morning. Okay, in our S&P 500 over 1%, you say 55 over 51, so that's like almost 1.1%. We have the Nasdaq up a huge amount at 1.5%, and then Dow is also up quite a bit at about 1.25%. So there's definitely positive sentiment, positive bias in the market today. So probably the employment report came out really well as well, really positive as well. So we've got the kind of a 1-2 punch from Apple and an employment situation. So let's take a look at Apple and see AAPL, and see how well. So pre-market, they're well above even their MA 200. That's very positive. That's going to pull the Nasdaq high. And our employment situation. Oh, non-farm payrolls way down. So this is what they would call a soft report. Payrolls way down, the employment rate higher than expected. And the market is interpreting that as good news because that may mean that the Fed might stimulate the economy. I don't think so. I don't think we're getting that rate cut, especially after everything that Powell said in the press conference. He was just saying, well, data, we got to look at the data. It's unexpectedly sticky, or as we all know that inflation is sticky, which is the opposite of what he was saying when he was saying that inflation was transitory. So he was trying to signal as hard as he could that rate cuts were not coming anytime soon. But the market is saying, well, maybe this employment situation will change his mind. Let's take a quick look at the FedWatch tool and see where we stand in terms of is it July or June? June of a June cut. June, they were pricing at 13.3% likelihood of a cut. And you're probably looking at more like a 0 to 5% based on what Powell said. If we look at July, there's a huge amount. It's a 44% possibility of some sort of rate cut. So the market is still really, really enthusiastic, a lot more bullish than if you just look at the raw data would imply. So let's take a look at didn't mean to do that, our pre-market levels. You can see that we're already up. This was in conjunction with Apple, and I'm not making that up, right? If I look, you see when Apple shot up, that's when the S&P 500 shot up during the aftermarket hours. And then right here, the employment situation, 530, we had another huge spike upwards. And at least as big, maybe even bigger. Actually, it looks like it's bigger than the reaction to the Apple earnings reports. So let's put IWM back here. We're definitely going to want to keep watching the VIX, so I'll keep that over here. But you can see that gap down in VIX, 13.77. That's the lowest we've seen in a while. We'll look at that on the daily chart pretty soon here. But what we need to see now is, since we gapped up above the 510 level, we need to see that 510 level or region defended and held. I think we're right at resistance on the daily level. This is probably the MA 50. So we need to see that MA50 either breach or hold and then reject downwards. And if it rejects downwards, we've got this 510 level that right here. So it's going to have a little bit of work to do. This market has a little bit of work to do if it's going to come back down and stay in between those MA90 and MA50 levels. Let's take a look at what I'm talking about right here. Okay, here we have the MA90. Here we have the MA50. The pre-market is showing 510.59 and the MA50 is at 511.47. So we're 1 point away from that MA50. If we trade upwards and we hit that MA50 and it proves to be a strong resistance, then we'll chop there or reject and come back downwards. If we do manage to break through, then we can move higher and at least to this 517 level, and then we've got the all-time highs over here. How likely is that? Well, we've been in this market chop mode. So after yesterday and after seeing the Apple earnings, it suddenly became a lot more likely that we're going to chop back and forth. So we didn't do a post-market review yesterday, but I did write in the Telegram channel to everyone that we're now looking at the most likely scenario being a chop sideways in between the MA90 and MA50. We're going to test that this morning or today because the employment situation brought us almost all the way up to that MA50. So that MA50 is going to be an important test. If we reject back down, then we're right back into chopping back and forth. And of course, if we can breach it, then our probabilities change. Right now, the higher probability situation is that we continue to chop back and forth between the MA90 and MA50 unless there's some sort of stimulus that brings us over the top. Does Apple earnings plus employment situation bring us over the top? Probably not. It's what brought us to the top. It's probably not going to also be the same news that brings us over the top. So we would need something else happening over the weekend or another really great round of earnings to help us boost or to jump over that MA50 level. So we'll take a look at what earnings are coming up to see if that's possible. Another possibility that might do it is if we get some really great news out of Ukraine or out of Israel, Palestine. So there is a possibility of that happening, but the things that I just mentioned are not market events. So they would be kind of temporary. If I look at this market technically, if I only look at market forces, well, then I need to include earnings. So there's still some unpredictability because of earnings. But if we were not in earnings season, what would I be looking at? What would we say would be the most likely scenario? And the most likely scenario would be chop sideways. Now that we've kind of not removed completely, but we've reduced the possibility of breaking down from that MA90 immediately and going to a correction, then the more likely scenario now is chopping sideways, because the way that markets move, usually, not always, but usually, is that we move, we rest, we take test to one direction or the other, and then we move again. So even on the way up, we move, we rest, we tested to the upside and broke, then we moved. Then we rested, we tested to the downside, it failed, and we moved to the upside, we rested, we tested to the upside and broke, moved, and then we rested for a really long time. We tested to the downside, it broke. And then now we're resting again. You see this past week, a week and a half, this is a rest. Slightly upward motion, but for the most part, it's been a rest. So right now we're in rest mode and we are not yet in test mode, although we may test the top today. If that test fails, then we'll be still in rest mode, and then we may test to the downside. So if the test fails, then we're still in rest mode, and that's why the higher probability event currently, as in the short term, is that we continue to rest. Once we see a test to the downside or test to the upside again, then we would wait and see. We wouldn't know exactly what would happen. There would be roughly a 50-50 chance of either failing the test or passing the test. Passing the test would mean breaking either whichever direction that we're testing. Today, we're looks like we're going to test to the upside. And so there is a possibility of breaking and going above, but if we don't, then we're back in rest mode. So we're going to watch very carefully these levels right here, that 511.5 or 512 region. And again, if we do break that, then this one is minor. And we're looking at this 517-ish region, or on this daily or intraday chart, where it's showing up as a region of 516.5 to 518. So that's going to be very important for us to watch that test and see if we reject. Normally, on a huge gap up like this, we would expect that we pull back at least a little bit. Sort of like yesterday, we gapped up and we pulled back all the way to this 500 level. It's just that we got strength later on in the day, and that brought us even higher. So at the very least, intraday, we would expect to at least pull back down and test the 510 area. We're just kind of sandwiched in between two levels that happen to be very close to each other, or maybe a better way to say that is that we're in a region right now, and we need to see if we're going to break out of that region. Most likely we will, because it's a pretty narrow region. So we could test to downside 508.5 or 505, then bounce back up. That would look very much like yesterday. Or we could test to the upside, come back down, then we would test 505. And if that held, then we could go back up. And that would be more like a chop sideways for the day, unless we get a lot of strength into the weekend, which is probably not too likely because, well, we're at an interesting timing wise, but normally we don't want to take a huge amount of risk over the weekend. However, we are still in the month beginning time period. If this was a quarter beginning, it would be more likely that we could move directionally today. But even with a month beginning, there is still that rebalancing that we get on a monthly level. So there is a possibility that we do get directionality. We're just going into the weekend. Normally, institutions, portfolio managers will want to hold off and take that risk Monday afternoon rather than Friday afternoon. So Monday mornings are more for digesting the weekend news and planning how they're going to rebalance for the week. And then all of the execution not all of the execution, but a lot of the execution tends to happen later in the day or in the closing hour. So we need to take a look and see if we get any more catalysts. So today after market in terms of earnings. So today after market is nothing. I don't even know what this is. Only 22.5 million. This is a micro cap. I don't even know. Never heard of it. So next week, let's see what we've got. We've got BRKB, that is Berkshire Hathaway, the Warren Buffett's, at 863 billion market cap, which is huge. So normally they're pretty steady though. They're value investors, so they don't have a lot of volatility. Let's test my statement and make sure that we're saying giving proper facts and data. BRK.B, Berkshire Hathaway. And let's take a look at your implied volatility. Well, we'll take a quick look at the beta, 0.89, so less volatile than the market generally. And if I look at my options and I go to next week and look at the overall implied volatility, 21.95%. So it's not huge. It is double the historic, but that's not abnormal. If we go as Disney, so Disney's not one. Let me see one that where we might expect a lot of volatility. It's like Uber, maybe we would expect a lot of volatility. And let's take a look at Uber. I wish I had Apple to compare, but it already passed. Uber. Okay, so historic volatility 27. And then here we have implied volatility 77. So it's triple the normal volatility, whereas Berkshire Hathaway was only double the normal volatility. So that's what I was talking about. Berkshire Hathaway, even though it's huge market cap, we just don't expect giant earnings surprises from a stock like Berkshire Hathaway. So more likely, so Disney, maybe, because they're in the news a lot, but they are more of a blue chip stock. So again, we don't expect a huge amount of movement. Just the fact that they're in the news a lot is what gives them a little bit more volatility than a normal blue chip. And then Uber, we just saw 77% implied volatility, meaning that the market makers expect the possibility, or with roughly 70% probability, that Disney options can move 77% overnight just because of earnings, which is kind of crazy to think about. That's quite a range. So the upcoming, though, other than Disney, Uber, Progressive, ANET, I would say those are the more important ones. PLTR that are happening next week, that's not a whole lot of stimulus. So it's nothing like Apple, Microsoft, Netflix, Amazon. We had all of those in the past week or week and a half. So it looks like next week isn't going to be nearly as influential in terms of earnings effect on the market as we had over the past 2 weeks. The past 2 weeks, what did we get? We got this giant chop fest. So the likelihood of us having earnings push us over the edge and go above the MA50 is low. And that means that our higher probability event that we should expect is still chopping between the MA90 and MA50. So I personally do expect this MA50 to hold. We might break through it a little bit, but my current expectation is that we would trade back down and this MA50 would hold. Yeah. Okay, we have a couple more reports this morning, I think, after the market. PMI. Okay, PMI at 645. So 15 minutes after the market opens, that would cause some volatility and maybe some directionality. So maybe if it's incredibly low, then that could send us over the MA50, and that's about it. But normally we don't. We're not. Why would we expect it to be really low? All the inflation data that we've been getting lately was that inflation is increasing. So there's no reason for us to expect that this is going to help boost us and drive us over that MA50 level. In any case, we're going to watch that very, very carefully. We're going to see what happens with VIX. But VIX dropped way down. So this was our normal level for all of April and May, or I guess all of April, we're just beginning May. and we dropped below that, and we're back into this normal level for all of 2024. It's probably going to take some pretty big news for us to fly back upwards, and we would expect that to be associated with a pretty rapid breakdown. If it does, if we just float back up to 15 or 16, then that would just mean we're chopping. It would just mean that that S&P 500 is coming back down to the 500 level, which is normal, which would be chop sideways. It's only if we break below the 500 level that we might expect that VIX to break above the 16 and a half level. And so we'll watch VIX, see how well or whether it heads towards 16 and a half. But right now, we're not expecting anything that would cause us to break through. We would just undo the moves that we had, well, that we anticipate we'll have today and that we had yesterday. So you can see that off this MA90, the last time we touched it, it only took 2 days to get to the MA50, took 2 days to get back down to the MA90, and now with the open today, takes 2 days to get back up to the MA50. And so do we expect us to go all the way down to the MA90 in 1 day? No, we expect it to take at least 2 days. So we're probably going to get a little bit of a pullback today. That's the higher probability event, and we're going to chop sideways. So we really need to start looking at our portfolio and balancing it out instead of the slight bearishness that we were starting to go. We need to add in some longs in order to balance that out and go back to neutral. Yeah. So that's what we're looking at. That's what we're going to prepare for. We're 8 minutes before the market opens, so I'll leave you guys there. And remember, on Fridays, we don't have a post-market review. We only have the weekly market review on Sunday. So have a wonderful day, have a wonderful weekend, and I will see you on Sunday morning.